last night on our segment of News Night on the Rise News, we had, of course, General Christopher Musa, who, of course, is the Chief of Defense Staff, speaking about the accidental bombing that took place in Kaduna, the casualties. Now, out of that interview, we extracted, of course, a point where he spoke about military equipment, Nigeria's budget, and the fact that the equipment that is purchased by Nigeria is in foreign exchange, which of course is part of the conversation on the stress on Nigeria's foreign exchange reserves. Here's what he said.
And then, we don't manufacture any of the items we use. We buy them in dollars. And so if you look at the amount that has been released and convert them to dollars, how much are they, how much? For example, the 1 billion that was released for in the past, these 12 Super Tucanos that were bought for over $600 million out of 1 billion. That's almost gone. How much do you buy MRAPs? How much do you buy APCs? How much do you buy tanks? How much do you buy ships? How much do you buy aircrafts? So you find that with the monies you do, when you convert them to dollars, you are not even getting much. For every piece of ammunition we buy them in foreign currency. And we buy them in millions because you use them quickly. So I think people should really understand that, yes, we cannot get everything that we know. It's not possible. No nation gets what it gets. The American budget next year for defense is $843 billion. They manufacture their equipment. They buy these equipments. And other countries, China, Germany, Britain. So you see that it's really a tough one. And that's why the president has approved the bill, just signing the bill for DICON. For us, we must produce what we need.
All right, so there's a foreign exchange angle to what the general said, but there's also a manufacturing point. So that's what we're going to get into our trade numbers now in Nigeria for the third quarter of this year. So let's get into it. Total trade, 18.8 trillion naira, 53.1% year-on-year growth compared to the third quarter of 2022. Exports, 10.3 trillion, 74.3% growth year-on-year compared to where we were in the same period in 2022. Imports, 8.4 trillion as far as the numbers are concerned. Now, we're going to dig in a little further into those figures, looking at and this is what the general was talking about. This is exactly what the Chief of Defense Staff, General Mustafa, was talking about when he said we need to manufacture what we need here at home. Manufacturing imports, 3.9 trillion naira, almost 4 trillion. Other oil imports, or rather other oil products, 2.8 trillion, 24% climb. Raw materials, 950 billion. Agriculture, 643. Now, if you flip this and look at exports, you will see that Nigeria exported just 200 billion naira worth of manufactured goods. So the imbalance is the subject of our discussion today. We're happy to be joined by Ibukun Omoyeni, who is a Sub-Saharan African Economist with Vetiva Capital Management. Ibukun, you're very welcome. Good morning to you. Thanks for joining us. So what did you make of the trade? Let's start from macro view. What did you make of the trade numbers for the third quarter?
Okay, for the Q3 trade numbers, what we saw is just the impact of the devaluation. If you notice, from import to export, you are seeing double-digit increase, right? But when you dimension on the dollar equivalent, you find out that in real terms, we've actually recorded a decline in trade flows. Beginning with exports or with imports, right? Import was about $15 billion Q3 last year, and now it's around $11 billion. The large decline in imports could be linked to the subsidy removal. Because when we looked at CBN data, it shows that oil imports, which consider about 30% of the import basket, fell by about 7% from between May and June, and that just reflects the impact of subsidy removal. And due to the fact that they've removed subsidy, right, there's less incentive to bring in oil, because of course that margin has been eroded away. So what you'll find out is that it led to a huge decline in crude oil export, or oil import rather.
Yeah.
So when we looked at it for Q3, because we've not seen the dollar equivalent, but when we tried to extrapolate, found that it's a similar situation. There was a larger decline in the import figure from oil imports that contributed to the increase in the trade surplus. So that we are seeing a significant increase in trade surplus, highest since about Q3 2018.
Yeah.
But when you look at oil imports, it fell by about 4 billion compared to what it should have been. And on the export leg, right, oil production has improved year on year, but oil prices were higher last year than it was this year. And even though we're not producing as much as we did this year, like we did last year, we are seeing lower oil export in dollar terms, right? If you dimension in dollar terms of these variables, you find out that we have a slight, about $900 million decline in exports, but we have a $4 billion decline in imports. And because of that huge decline in imports, we are seeing trade surplus rise to significant levels.
What do you this is an interesting point you bring up, because even when you look at the NGX, 37-38% year to date, that's in Naira. In dollar terms, that's also down as well. So the devaluation has, of course, had its impact across when you look at different metrics. With respect to what we saw in Kaduna, the unfortunate incident and the exclusive that we had with the Chief of Defense Staff there, where he was on Newsnight talking about how we need to manufacture more things at home. What do you make of the big difference between how much we're importing in terms of manufacturing and then as opposed to how much we're so 3.9 trillion imports versus just 200 billion in exports? As far as the manufacturing numbers are concerned, well, how are you assessing that?
So for Nigeria, right from time we've been exporting more of oil. So on the import leg, right, Nigeria escaped, it moved from an agrarian society to a service-based society without passing through the industrialization phase. Yeah. And the jobs, the currency movement, they are all in the industrialization phase. So even though you have a booming service economy, once you don't have your industrial economy set up, you are not going to earn that revenue, you are not going to have that employment, right? If you look at most emerging countries, emerging economies that we boast of today, like India, for instance, you can see that they actually pass through that industrialization phase. Once the industrial sector is missing in action, you wouldn't really see that benefit. Then for Nigeria's manufacturing sector deficit, right, it just shows us that more needs to be done in terms of addressing the challenges around infrastructure, right? Because infrastructure is one of the key challenges in Nigeria. If you look at SA, for instance, the manufacturing sector is one key driver of the economy. That's why you find out that the power shortages contributed to a decline. But if things were up and running, we would see higher numbers there. But for Nigeria, power has been a long-standing problem. Right? There are other problems around insecurity, other problems around, of course, the problems are actually very many, and it will take decisive actions, right? One of the famous economists, Solo, he says that you need to save about 10 to 15% of your GDP in order to develop over a period of 10 to 15 years, right? And when you look at Nigeria's savings, it's quite low, very, very low. And when we look at our budget size, government is probably one of the largest investors in Nigeria. And when you look at the fact that this year, for instance, the government did not even raise a naira in foreign debt. It raised all in domestic debt. And when you have the government raising domestic debts in Nigeria, a lot of private sectors are crowded out, and there is no enough funding to drive development in the industrial sector and the manufacturing sector. Of course, there's some good news. We have the refining coming, Dangote Refinery, Port Harcourt Refinery, and all that. We did our modeling and we discovered that if 50,000 barrel increase in our refining throughput will lead to about a 0.4% increase in our GDP. And what that implies is that the kind of growth that we want to see would only happen if we actually manufacture, and that is why manufacturing is actually very, very, very important. So once we begin to see probably refining figures pick up next year, that should actually improve the manufacturing export, especially oil export, in terms of refining product, because refining is not subject to OPEC quota. OPEC has the quota on your crude oil export, but once you can produce more than your quota in your domestic economy and take the excess to your domestic refineries to refine. So we can do as much as 4 million barrels if we want, if we have refineries to refine the excess, right? Quotas only cover exports, crude oil exports, not necessarily crude oil production.
Thank you for that breakdown. It's amazing how the manufacturing sector just cuts across the economy to where we're even talking about insecurity, and we've got, Chief of Defense Staff there talking to us about how manufacturing is impacting the need for more equipment to defend the nation. Okay, you mentioned refining. What do you make of the fact that exports are 10 trillion, and out of that 10 trillion, 8.5 is crude, and then another one, we'll put the figures up again. Basically almost 9 trillion, almost 90% of your exports are still crude. There it is. So 8.5 plus 1.1, that's 9.6 out of 10.5. So is there not still an overdependence? You just talked about your modeling and, refining capacity, adding 0.4% to GDP. Is there not still an overdependence on crude for Nigeria?
Yes, Nigeria's Nigeria is not actually diversified, right? If you look at GCC economies, like the kind of Saudi Arabia, Kuwait, Bahrain, most of those economies, they use the savings from their oil exports to power their economy, and that is what we've not seen in Nigeria's case, right? The PIB was passed too late, right? It's passed at the period where we're looking at climate change and reducing investment in fossil fuels. So it's a very challenging period in time, but looking at the near-term prospects, right? I think we should begin to refine, right? When we begin to refine, we're able to overcome some of the headwinds associated with the crude oil, right? Like the quotas, like oil prices and everything, right? India, for instance, there was this video that was trending, I don't know, some months back, of a lady taking a tour around India and was like, we don't produce oil, we just refine, and we make the money. Nigeria produces oil, they don't refine. So it just shows you that once we can refine, that's when we are truly industrializing, because that is where we become to diversify from there.
You mentioned India twice. My favorite topic of this year is India. I mean, we just talked on the first segment about their stock market capitalization reaching $4 trillion now, top 5. Speaking of India, since I'm going there now, our trading partners, India shows up in exports, India shows up in imports. But we've talked a lot this year about trade, intra-Africa trade. Professor Benedict Orama is the Ford's Africa Person of the Year. He has done quite a lot to try to improve intra-Africa trade at the Africa Exim Bank. But you see these figures here. So your top 5 exports, Spain, there's India, Netherlands, Indonesia, France. South Africa was in like 10th position, right? I look at imports now, of course, China, 23.3% of imports. Belgium, India again, Malta, United States. Ibukun, what's your outlook for intra-Africa trade? I mean, it looks like a lot. Without all the talk, the numbers are the numbers, right? How do we get like 3 or 4 African nations to show up on that list?
Okay, possibly, to begin with, the refining will actually help. Why? Because if you look at the export, what are we exporting? We're exporting crude oil. Right? We can't be exporting crude oil to an African country because many of them don't have refineries. Yeah. So we are exporting to European refineries, and once for example, the local refineries come on play, a lot of African economies will find it cheaper to buy from Nigeria. So by that time, we will need to talk about intra-African trade, because when you look at Africans' trade books, you find out that oil imports is a major driver of their books, right? So if you want to trade more with African countries, just produce refined oil, and that's when they would increase their trading partnership with you. And I think once we begin to refine oil, we have what we can export to other African countries. It can't just happen by wishing, right? It has to happen by investment, right? You have to actually invest in the sectors that you have to look at. What do African countries import? Majorly petrol. They want to refine. They want to import refined petrol. And what do most African countries have? They have crude oil already. They're already exporting their crude oil, but they don't have refineries that can do the kind of sum that would make other African countries come to them. But by the time we start refining our oil, there will be a huge market for refined petroleum, and from there, I believe that is when we're going to see more African countries come up in our trading list.
Okay, that makes complete sense, perfect sense. This is why we have you on the show, to break these things down. But so that means it's still the crude story. What about value-added goods, right? So other Cote d'Ivoire, Ghana, cocoa, chocolates, and other stuff. Is there not still a case to be made for us to ramp up production of value-added goods that we can export to other nations beyond the crude oil story?
So beyond crude, of course, the major challenge with African countries is that we export a lot of primary products, and there's little or no value add. By the time you export them, you get to import them at a more of a refined good, but at a higher price. So for most of these economies, like I said, the huge constraint is oil. The huge constraint, because most of what used to drive, and not just oil, power, right? Most African countries have power issues. So if there are power issues and you have issues with oil, where would the fuel for the industrialization come from? Right. So once you're able to fix that point, then you can begin to look into other sources, right? If Nigeria gets it with refining, it's going to change the landscape with Africa, because when we saw, like I checked this morning, petrol prices in Benin is around 900. Our neighboring countries, Benin, Togo, is around 900, right?
That's 900
naira
right, per liter.
Per liter.
Yeah.
Right here is 600. If it goes up, if Nigeria's fuel price goes up to 800, it's going to go up there to about 1314. And once you have high fuel prices, it stifles the economy. The manufacturing sector cannot produce. So once you really solve oil refining and you're able to localize these things, and it becomes cheaper, because once you can export refined crude, there will be more dollar supply, and that would reduce pressure in whatever sense, even though the Naira has its own unique challenges now, because ordinarily we should see the Naira gain following the 89% drop in oil import, but there's excess money supply. So we have to curb that excess money supply by ensuring that 22 trillion ways and means is actually properly securitized or repaid so that it doesn't affect the exchange rate, because the exchange rate is not responding to trade, now it's responding to excess money supply. So
everything is so interlinked. Okay, executives in Dubai that are watching at COP28, their hearts are probably falling with everything you said, because it's all been crude, oil, refining. What does all this mean for the energy transition for Africa? Does it mean that with everything you said, that is still a long way away, or is there,
It's still a long way. Even Elon Musk will agree with me that of course, is not going anytime soon. Crude oil is not going anytime soon, and it's still a place to actually invest, right? Especially for African countries that do have these things. It's actually you can't take away fossil fuels, not in the next 20 years. Yeah. I don't know what their plans are, but when you look at the dynamics around, some of these economies are actually going back to coal. Yeah. When we had elevated oil prices, so it's still a source of. So you cannot look at measures to mitigate the impact of climate change, but at the same time, we think over the medium term, crude oil will still remain quite relevant.
Yeah. One of the most hardworking governors in Nigeria, Peter Mba of Enugu State, we covered his budget presentation. We're going to coal. He is straight into coal. He's not even listening to any energy transition talk. He's trying to boost the economy of Enugu State. Ibukun Omoyeni, Sub-Saharan African Economist with Vetiva Capital Management. Always a pleasure having you to break all these things down. Thank you so much for joining us.
Thank you very much.
Appreciate it.